people could actually donate their Bitcoin, not pay taxes, donate their Bitcoin to this entity. REITs are a big competitor to me. They cannot, by law or regulation, ever own Bitcoin. The banks are all looking at this as like, dude, you have a indestructible business. Now we got to figure out how to go public. It's not if, it's when and how. If I get 5% of the REIT business, I'm $200 billion. We're not a treasury company. I got real cash flow coming. Borrowing money is not a business strategy. You can't just borrow money forever. So all these guys are copying what Mike Saylor did, but they forget that Mike Saylor started with customers. I have 20,000 investors. This is an income model. If you own one Bitcoin, cool, but the price of Bitcoin is not as important as the number of units of Bitcoin. You can't make money if you don't have units.
Archie.
REITs are a big competitor to me. People could actually donate their Bitcoin, not pay taxes, donate their Bitcoin to this entity. They cannot, by law or regulation, or via their operating agreements, ever own Bitcoin. They can, in fact, keep cash on their accounts. They have to distribute 90% of their cash. So when we put this real estate Bitcoin fund together, what I did was I went and basically studied my REIT. My REIT is the competition. The REITs and the big banks are my competition. So, or they're going to help me, one of the two. Your competitor can help you. Okay. So my biggest competitor is the REITs. They have to distribute all their cash. 90% of their cash has to be distributed, and they can never own Bitcoin. So when I joined the two together, I cut off distributions. We used distributions to add Bitcoin. We put the two together. I just took 190 companies out of play, and I create a new entity that has $4 trillion of assets under management. And the banks see this new combination. They see this new combination as a new piece of machinery. I just need to validate and prove it out.
Yeah.
And so that's what I'm telling you. The banks are all looking at this as like, dude, you have an indestructible business. You're first to the marketplace. You can scale this. Okay. You have trophy real estate. This isn't shit real estate. When my team sends you some of the stuff we're buying, these are best in class trophy assets, institutional owned, cash flow positive day one. We don't have any building risk. And we've accumulated almost 3,000 Bitcoin in 10 months. We're not a treasury company. We're not one of these treasury companies that doesn't have products and doesn't have accounts receivables and doesn't have cash flow. Dude, we got cash flow. I got real cash flow coming. I don't have pretend cash flow. And I've been running this business for 30 years. I'm not new to running business. You got a lot of people dropping into these DATs, never run anything. Just because you're a crypto cowboy doesn't mean you can run a company. So, you know, we got a lot of people very, very interested in this. Now we got to figure out how to bring it to the marketplace and how we want to go public. It's not if, it's when and how.
Yeah, I mean, I look at what Saylor's achieved with his company over 5 years now, and it's been a phenomenal success without a doubt. And I look at your business model and like, why can't you guys absorb tens of billions of dollars in funds and sweep up the best commercial real estate properties around, and then augment them with Bitcoin purchases as well? I could easily see, I mean, that's infinitely scalable. How big's your target addressable market there? Is it a couple $100 trillion in the world?
Well, if I get just the REIT, if I get 5% of the REIT business, I'm $200 billion.
Yeah. How let's say that you got all the green lights. You got all the green lights to do that. How many years will it take you to scale up to that, do you think? Because you can't do it all at once, obviously, right?
Yeah. Well, you know, maybe.
Surprise us all, Grant. But I mean, honestly, like when I look at what Michael's done, it did take them, I guess, you know, 3 or 4 years to get through the bear market. But the last 18 months has been a massive step change, acceleration in their business model.
The first target's $50 billion. So we're at $5 billion right now. The first target is $50 billion. That could be done a number of different ways. And, it's not that complicated. As long as I don't complicate it. Unfortunately, the lenders tend to complicate everything. And they're not that bright. No offense to the lenders, the banks out there. The banks are not that bright, which is very disappointing to me. Was shocked to find out that they don't have all the answers. They're not the entrepreneur. See, but how many of these can I buy?
So what's the risk for you, Grant? Is it that you've got to maintain your quality standards in selecting property?
Yeah. Can you see this right now?
Yeah, we can. Yeah, we can see a diagram of a building. Yeah.
So, see, the question is, how many of these can I do, right?
Mm-hmm.
And there's an endless availability of these products. Now, if I was willing to drop the quality of the asset down, I'd even have more. This is 366 units in Boca Raton, as good a location as you could possibly get. If I was willing to compromise some of that, it would get even easier. But if I can go public with it, okay, like we did it with this deal. This is a deal that we had a debt problem on. We paid the debt off and had our audience fund this. It was $15 million of real estate, $15 million of Bitcoin, and $100 million of debt, of good debt. We have these 6 deals that we're working on right now that were paid for in cash. So we have this deal in Chicago. This is 800 units in Chicago where the owners are about $80 million below replacement costs and want to get rid of it. They don't want to sell it, but they would probably donate it to my publicly traded company. Here's another deal in Chicago. I mean, it's an endless list of trophy assets that the owners don't want to sell because the market's not conducive to the price, but they would donate it to my publicly traded entity, no tax event, and they would get liquidity with shares so that they could actually get the liquidity they want. Also consider that we build this vehicle. When we build this vehicle right, we would basically have an Up-C corporation sitting on top and an operating company sitting below, that so people could actually donate their Bitcoin, not pay taxes, donate their Bitcoin to this entity. We would bring that public. The company's stock price should go up, and that would provide that Bitcoin holder now with cash flow,
mm-hmm.
tax write-offs, liquidity if they want to sell shares or borrow against their shares, but they would get the lift and the benefit of both. Look, the Bitcoin's worth what today? 104,000?
103, yeah. It's
My real estate's worth.
Yeah.
Exactly. So whatever they're worth, that's what the marketplace, my real estate's worth this and the Bitcoin's worth this. But when I fuse the two together, and now I have a story and I can keep adding real estate and Bitcoin and real estate and Bitcoin and cash flow, and my cash flow grows, then the two together should as a stock become worth more than if they were separated. Again, this is a real company. This is not the empty treasury. And I hope all those guys make it, but you and I both know there's going to be some failures in the data industry.
I think we're seeing some of them tremble a little bit at the moment, actually. So
maybe some of those guys throw in here. Maybe those guys say, "Hey, you have cash flow, you have an operating entity, you actually know how to run a business. We have 2,000 employees across 5 different companies right now. Why don't I donate my DAT that's trading below market? I'll donate it." Okay. And literally because the guy running the company right now is getting his head ripped off by his investors and the marketplace and the headlines. I'll donate my Bitcoin. We're trading below market and we have no exit and we have no strategy. How about I donate the asset to you, or you fold up into this company and you run it? We'll immediately get a bump. Now we have a plan to strategy.
Grant, here's an idea for you. There are some mining companies who are just sitting on Bitcoin that's dormant and not being put to use. Have you had conversations with those people to potentially partner up, since they're just sitting there? They're not really doing anything with it, maybe waiting for a bear market to liquidate.
Yeah, I like that.
Tens of thousands of Bitcoin just sitting there doing nothing.
I had Eric Trump in my office Friday. I'm an investor in ABTC.
Okay.
Me and Eric did a video. We dropped a video yesterday of him in front of my office, had 1 million views on Instagram. But yeah, dude, but you know, like how many guys out there are going to fail because they thought Bitcoin was going to be the saving grace? Yeah, no, it's not going to be the saving grace. Okay. You can go to church and take the holy bread, but you got to quit masturbating.
You're talking about treasury companies here, where a lot of companies just thought they could just buy it and perpetually sell their stock at a premium.
Yeah, exactly, dude. Like you can't just put Bitcoin. You have to have an operating basis. You have to run a company. You have to have a vision, a plan. Somebody's got to execute. Bitcoin is not the saving grace for the world. You have to change your behavior is my point. You know, like you still have to know how to run something. When you're done with the pipe, when you're done getting your money, you just went public and you got your 100 or 200 million dollars. I mean, what did David over at Naka get? 750 million?
Oh, I stay out of their affairs.
Well, whatever, dude. Like the story, you can do 50 of these stories, right?
Sure.
Once you've gotten your 100 million, 200 million, 700 million, now what?
Yeah.
Okay.
Yeah.
If you don't have a premium above NAV, you're not going to be able to get any more money. And man, borrowing money is not a business strategy. You can't just borrow money forever. At some point, you need customers. You need income. You need cash flow. Real cash flow, not some made up yield that my value went up. I bought more Bitcoin. I call that yield. No offense, but yield to me means cash flow, new cash, profit. And so all these guys are copying what Mike Saylor did, but they forget that Mike Saylor started with customers. Mm-hmm. He had customers. He had customers. He had accounts receivables. He had payroll, bro. He had like those things he doesn't really want today. He had as the basis of the company. He had a bunch of dough. He converted the dough to Bitcoin. He built a massive treasury that most people that are coming in today don't have and won't have and can never catch up with. Yeah,
so I think Strategy and Michael Saylor, they got to scale selling the convertibles, and now they're at a point where they can sell preferreds. And that is their value-added business model, right? And I think MetaPlanet is just approaching that point where they're at scale now. I don't know what their market cap is, but it's in the billions. And I think they're about to approach a similar strategy to Michael's company. So it will be interesting to see how they execute on that. They've done tremendously well until now, but I think they're the only two in the race at the moment. Everyone else is still trying to prove themselves. And like you said, many will fall and falter.
Yeah. That's the way the world works. That's not a Bitcoin problem, by the way. That's just entrepreneurship, business, cycles, gold rushes.
Sure. I mean, I'm really, I find your business model really quite compelling. I can't wait to see it scale, because I surely believe that it will scale to many, many tens of billions, if not hundreds of billions, rather quickly. So I'm fascinated to watch that.
Imagine I have 20,000 investors. I was with a big bank and they said, you're telling me they can't even wrap their head around it. They're like, you have 20,000 investors that gave you $1.8 billion. They said, what do you pay for advertising? Nothing. What are the broker fees? Nothing. What do you mean? Nothing. I said, I don't pay any broker fees. What is the preferred return you give them? Zero. What do you mean? What do you mean you don't have a preferred return? Well, in some deals we have a preferred return, but most of the money that we've rated is on a zero pref, no pref. Meaning we're all in it at the same number. They said, okay, you don't pay for advertising. You don't pay a broker fee. There's no middleman. How long is your money good for? 10 years? They said, what do you mean 10 years? I said, 10 years Archie invests in the fund with me for 10 years, and I have discretion if the 10-year cycle ends, and if it's not a good time to sell, I can go another 10 years.
Yeah.
And they're like, okay, so you have money basically that's free, friendly, and forever. I said, exactly. They said, where'd you build it? How'd you get this model? I said, I was at a dinner with Warren Buffett, and Warren said, never take money if there's a gun connected to your head. And that means if there's a time when you have to return the money, don't take it. And so that's what we did, dude. I just used my audience of 20 million people. 20,000 have invested with me, but the average investment's over 200 grand. It's closer to 500. What if I was a $5 stock? Okay. By the way, all my money's come from the United States. I have followers all over the world. I have 20 million followers online. What if the kid in Vietnam or Dubai or Iran could buy shares at $5? And I'm going to go tell everybody on social media, hey guys, I just took a company over, or I'm going public. I'm not going to be able to talk about it after Friday. Here's the ticker symbol. Monday morning, I'll be ringing the bell. Be there or be square. Okay. Now all these kids that follow me, 30% of my audience is black and under 30 years old. Like, I've reached a lot of people. Okay. I have audiences from all over the world. They all look different. Like, we've very varied audience. I have probably 20% of my audience is over 60 years old. Just extremely varied. Okay. My kids bring a big audience. My wife brings a big audience. So if I'm a $5 stock, because none of these treasury companies had followings. Mike Saylor built his following because of what he did with Bitcoin. He didn't have it before then. Then how many people in Vietnam or Dubai or Australia say, yeah, I'll buy 1,000 shares at $5? Because they never could access any of my investments before without that. So a lot of the banks are excited about this taking me public, because they're like, your retail audience is going to go wild over this offering.
Oh yeah, you've done their job for them. You've already got the distribution problem solved, and that's the hardest thing in business, to be honest, to get people's attention and get distribution. Yeah. And you've not only done that, you've got a brand, you've built trust, you've demonstrated excellence in returns as well over many, many years. So you've got that. You've done their job for them. So what value is it for them to bring to you now, the banks? It's like, okay, are you finding that you're in a very strong position to negotiate terms?
That's the problem. They're like, okay, Grant, we want to raise money for you. I said, well, yeah, but bro, I can already raise the money. Why would I take your money? The only reason I would take their money is because I would like Fidelity and Merrill Lynch and T. Rowe Price and Robinhood. I'd like that money. I'd like that money. I'd like those names to be associated with our projects. That would give us a lift, brand lift, obviously.
Wouldn't that help you scale? Their sources of funds are much more readily scalable than yours. Not to suggest that you've exhausted your pool of investors, but at what point do you think you'd need to transition to a larger pool of funds?
It's just their names would be cool to have alongside mine. That gives me a lift, right? Mm-hmm. But what's it worth? It's not worth 8%. It's not worth 6%. I'm not paying 4%. Like, all these other guys have paid all the fees just because, well, so-and-so paid us 8%. I'm like, good for them, bro. I ain't paying 8%, bro. I got an audience. Mm-hmm. Okay. He didn't have an audience. He didn't have a choice. He had to come in here, take a knee, kiss the ring. I don't have to. Okay. So, but what I want to do is I want a little bit from your audience, and I'm going to go get a bunch from my audience. And if your audience doesn't show up, my audience is going to show up. They've already given me $1.8 billion. They've given me $1.8 billion the hard way. Okay. If they can buy stock and be liquid, dude, when you give me money, you're not liquid for 10 years. No redemptions, no gates, nothing. So if I could tell you, hey, you can have your money in 6 months and be liquid 5 days a week. And I can offer that to my audience. I just got to figure out the right vehicle, whether we want to use banks or not. But I think it's going to be a massive thing for our investors. It's going to be phenomenal for anybody that's invested with me already. If I can bring them into the entity, which is a very big part of the complication. I'm trying to bring over my 20,000 investors, which may not be possible, by the way, because the SEC has never seen 20,000 new investors in an offering.
Yeah, I mean, excuse my naivety. I've never raised capital before, but if you're going to tap into the same pool of institutional investors who invest in real estate investment trusts, by the way, as sort of Michael Saylor's been doing, I mean, is there any particular reason why you couldn't scale at like $1 billion every 2 or 3 weeks?
No, there's no reason.
Yeah.
I mean, that's what we're looking for, $2 billion right now. So what I want right now is I want a $2 billion start. If a bank's out there listening to this right now, what I want from you is $2 billion to go out and buy $2 billion worth of real estate that I'll pay for in cash. I'm going to buy it 30% below replacement cost. It'll be cash flow positive day one. It'll produce $80 million of cash flow. I want to buy the real estate, and then I'm going to go put debt on it, $2 billion. I'm going to go put $1.4 billion debt on it. Let's say $1.2 billion of debt. That means I'm going to get $1.2 billion back from Fannie Mae, and I'm going to go buy Bitcoin with that. So I'm going to end up with $2 billion worth of real estate. This worth 2.6. And I'm going to end up with $1.2 billion in Bitcoin. And both of them together will be cash flow positive and produce $80 million. It'll double my EBITDA. It'll double my cash flow, which we're going to use to buy more Bitcoin. And then we go public with that. I want to get a little bigger before we go public.
Do you think an individual investor who wants to do something like this independently can replicate your model?
Sure.
How would you recommend they go about doing that?
Get a following, build a brand.
No, I don't mean to replicate your fund model, but for themselves, with their family money, they want to buy property.
Yeah.
Use funding to buy Bitcoin in addition to that. Because a lot of people have Bitcoin right now, but they can't get the funding to buy a property, for example. How do we unlock this value and get exposure to both assets without relinquishing ownership?
Yeah, so you're talking about an individual doing this or a competition?
No, just an individual for themselves, not in a fund, not for investors, that sort of thing.
Well, you would buy a cash flow property. Let's say you found a property. Where do you live?
I'm in London, yeah.
Okay. Well, yeah, it's kind of hard over there, but you could still do it over there. You would find a cash flow property. Let's say a cash flow to 6 or 7 or 8% a year. And let's say it was, £1 million. You would take that asset and you say, okay, I'm going to buy it for £1 million and it cash flows 80,000 pounds a year or 70,000 pounds a year. I'm going to take it. I'm going to add enough Bitcoin to where it only cash flows 30,000 pounds. So I'm going to take the $1 million pounds. I'm going to add $200,000 of Bitcoin. I'm just guessing 3,000. And so my cash flow now is going to go from 7% to 4%. You're probably not going to do it with just your money. You're going to raise money from other people, and you're going to show them, hey, dude, this thing could do 30 or 40% a year. We have the real estate and the Bitcoin. Do you want to invest in it? You would put it together. You would syndicate it. The problem's going to be with £1 million, you can't buy much.
No, yeah. Well, not in central London anyway.
Not anywhere, not in England. I mean, the further you go out, the worse the real estate gets. You know what I'm saying? You can buy cheaper, you can buy more real estate, but there's nobody there. You need cash flow. Well,
I just found out that 1-bedroom apartments in my building sell for £1 million, and there's no way in the world I'd pay £1 million for any of the apartments in my building. There's just no way.
Yeah. And then the problem with that is you got one tenant, and if the one tenant leaves, you have no income. Mm-hmm. This is an income model. This is why people don't, by the way, do well in real estate. Over 50% of the people that buy one real estate deal never buy a second deal because the first deal didn't work out. You need scale And the number of units, like in Bitcoin, by the way, the number of units is the most important, like in all businesses, by the way. The number of units is the most important math in business.
Tell us why.
Well, the number of Amazon units sold. It's not, you can't get, you need scale. Okay. If I have one door and they leave, I'm 100% vacant. If I have 4 doors and one person leaves, I'm 75% occupied, 25% vacant.
Gotcha.
If I'm 40 doors and 10 people leave, I need 10 people to leave to get to the same number. If I'm 400 doors, okay, I could be 10% vacant. I still have 390 people paying rent. You need scale. Okay. Great company scale. If you own 1 Bitcoin, cool. But the price of Bitcoin is not as important as the number of units of Bitcoin. Right. Yeah. So it's how many units do you have of anything is the most important thing. If you're a grocer, if you run a grocery store, how many units, how many customers? It's the number of units. You can't make money if you don't have units.